guys, welcome back to the Purpose of Money YouTube channel. I just wanted to follow up with a part 2 of the deferred payroll tax just to help people understand what's going on with their paychecks. Because you are listening to the Purpose of Money podcast, a podcast where we talk about ways to build wealth and create more freedom in your life today. I am your host, Acquania Escarnet. So in this video, I'm going to explain why and answer some of the questions that you guys asked after I posted part 1 of this series. So you may have realized you're starting to get paid and you have more money in your paycheck because as of September 1st, the president's request to have the payroll tax deferred between September 1st and December 31st went into effect. So what does that mean exactly? Well, 6.2% of the taxes that you used to pay are not being paid, so they are being kept in your paycheck. But they are currently being required to be repaid in January of next year through April of next year. So anyone who got a bigger paycheck, I told you last time, make sure you actually save this money because January to April of next year, when your job is required to repay the deferred taxes, you will see that much money less in your paycheck. So giving you some numbers, say for example, you make $205 extra this paycheck and you are going to have to get 7 more paychecks before the end of the year. So a total of 8 paychecks where your payroll taxes were deferred. You will pay approximately that same $205 back each paycheck starting in January, in addition to the regular taxes that normally come out of your paycheck. So I just want you to be prepared for that. This is not a windfall. Make sure that you're allocating your funds wisely and putting some money aside for when your paycheck is lower next year. Another question that some people asked after I posted my first video was, what is the wages based on? So not everyone is impacted by this. You actually are only going to see the deferred payroll taxes if you make $104,000 or less a year, or you make $4,000 biweekly. So anyone who meets those criteria, you're going to see more money in your paycheck. But what does that include? So FICA wages is what is being used to calculate if you are $104,000 a year or $4,000 biweekly. That includes salary, bonuses, awards, reimbursement for moving expenses, anything your job pays you that is taxable compensation. So if you get any of those things and you're still making $104K a year or $4,000 biweekly, you're most likely going to see additional money in your paycheck between now and the end of December. And if you're paid bi-weekly, you probably have about 7 paychecks left, meaning 8 paychecks you'll be getting this extra money. And hopefully, if your company is smart, rather than taking the money from you all at once next year, they will spread it out across 8 pay periods or 8 paychecks. So then you can spread out the repayment across several weeks. Another question that was asked was the process and repayment. It is supposed to be repaid taxes. However, Congress and the president or president-elect can decide to find a way to waive these taxes, but that would require an act of Congress. The president by himself cannot declare these taxes be something that's forgiven. So they would have to work together on a plan. Congress would have to actually agree to it, and then the tax repayment would have to be forgiven. But until that's done, expect to have to pay these taxes back the first couple of months of 2021. So I hope you're saving and making sure you're tracking your money in your budget so you can account for when your paycheck is lower in the new year. Hope this was helpful. I hope you guys appreciate, subscribe, and like. I really appreciate any comments. I'm always responsive and happy to answer any questions you may have. Thanks for watching. Thank you for listening to the Purpose of Money podcast. For more resources and information, check out my website, thepurposeofmoney.com.